Well, defense stocks have been facing selling pressure of late as investors are bracing for a soft Q1 earnings season compared on a sequential basis, and they're also reacting to some near-term challenges. Now, the key drag is the sharp sequential drop that is expected in Q1 FY26 earnings. Now, companies like BEL and HAL, they could see a drop of 50 to 60% in revenues on a sequential basis. That's coming off on a high base in Q4. That's as per a report by Nuvama. On the other hand, execution delays are also weighing on sentiment. Many firms are struggling with large backlogs and supply chain issues from Russia and Israel, especially for key components. Now, adding to the pressure are high stock valuations, with most defense names trading at a premium. Now, even minor execution and margin misses are triggering corrections there. So, there's also a cyclical softness post a strong Q4, where post-election ordering had spiked. Now, Q1, which is typically a seasonally weak quarter, is adding to that investor caution. In July so far, BDL is down 5.5%, BEL that's down about 3%, whereas Mascowdoc that's down about 3.5%, while other names like HAL and BEML, they have remained largely flat. Now remember, this is after a stellar run that we saw in these counters in the first half of 2025. Still, not all is bleak. Year-on-year growth remains healthy, with order inflows likely to go up 71% on a year-on-year basis to 85,000 crore rupees. Now, as per Nuvama, companies like BEL, they are expected to sustain margins driven by higher indigenization and operational efficiency. In fact, the brokerage says Q1 softness and supply concerns are pressuring the sector short-term, but the long-term outlook remains robust.